Hi everyone, thank you so much for joining me again. It's November 4th, 2015. This is Christopher Aaron, and I'm just going to be doing things a little bit differently this time. I'm doing these segments separately. So this one is going to be focusing on the price of gold, and then I'm going to have a separate presentation on the price of silver. These two markets are very closely related, so I do believe it's worth your while if you're invested in one to consider investing in the other as well. And I'm going to try to bring you some information on both markets. But I certainly do understand if you're primarily invested in one over the other, there is good reason to prioritize your time. So I'm going to try this out and do these presentations separately. So let me get right into this presentation. Right following this will be silver in a separate presentation. So we're looking here at gold. I'm going to move my video screen over there. Those are some nice looking bars, huh? And the last 3 days we've had some real weakness in gold, and I want to sort of explain what I see happening here in the gold market. Even I have been surprised by this weakness that we've seen over the last few days. Closing just above 1100 for the last close that we have here. Now, this chart I wanted to bring up, I think this is important to pay attention to for anyone who's invested in the precious metals. We're just looking at the last 3 days worth of action for gold, silver, and the S&P 500 as represented by these ETFs shown up here in the corner. And the black line represents the S&P 500. That is basically the summary of the US stock market, at least the 500 strongest companies in the stock market. Blue is showing us silver, and red is showing us the price of gold. So you can see very clearly here the divergence that's happened in the last few days. The stock market moving higher, the precious metals moving lower. So it's almost just like, the when the stock market's moving higher, people are just saying there's no need for precious metals. Now, if you are a trader, this is something to pay attention to, and you may want to position yourself for a trade here in one of these markets. If you're a long-term investor, you do not want to be chasing the stock market higher. So you need to be a contrarian here. Now, the precious metals have been moving lower for the last several years. The stock market's been moving higher for the last 5-6 years straight. Which market represents the value at this point? Is it the market that's been moving straight higher, or the markets that have been moving significantly lower? So I want to encourage people to kind of pay attention to this. And when you see, these are all assets that cannot go to zero, right? The sum of the US stock market is never going to be zero. It's not ever going to happen. Even in an Armageddon scenario, companies will survive. Same thing for the precious metals. They're never going to go to zero. So when you see these divergences, and this is just a 3-day chart, but we'll bring you these charts on the longer term scale. When you see these divergences, you really need to ask yourself, as a contrarian, which market is the next one to experience a rise, not which one is rising right now, because you want to position yourself for the next trend. So here we're looking at gold over the last year. I've been bringing this chart to you, and just bring up our key here. So you had this triangular consolidation forming in the last few months. You had that breakout, and I said there was a strong chance that this breakout would have to come back to the pinnacle of this triangular consolidation here, this apex point. And it sure did do that. And even I was surprised. It broke lower than this uptrend line here. So what we're looking at here is to say, is this uptrend completely over with? It looks like it is. And if that's the case, gold is then going to fall back down to its low for the bear market, which is around 1075 right here. Now, there is a chance, sometimes these markets try to fool people. So they try to fool you on the upside, they try to fool you on the downside. So did this make a spike lower here? Just like it made a spike higher here in September, it sort of broke above this line and then came back down below. Sometimes that'll happen. So we are watching for that here as we go along. But as of now, I am saying that this short-term uptrend has broken. And so we will be looking for a move back down to the lows here. So we have to sort of reestablish ourselves on the gold market and take a look. Is there a lower low to be coming? Let's look at some of those possibilities. Here we're just zooming in again on the 6-month time frame for gold. And we see that what was a short-term uptrend line here, it came back down as I predicted, and it has moved lower. So is this just a one-day move lower, or is this going to continue back down to the lows from August? We'll know in the next day or two, and then we'll be able to position ourselves and kind of know what to expect for the next several months after that. Why? Because if this comes back down to the lows, here we're looking at the 7-year chart. If this comes back down to the lows, we may have a double bottom. So a double bottom could represent a move where a commodity moves to a certain low, comes back up, and then moves back down to that same low to retest it. We always look for these retests on significant moves. Of course, gold still being in this primary downtrend, shown here in the royal blue. Now, could this break lower? Could this come lower than 1075? Yes. Now, this was a weak uptrend. I myself was surprised by this uptrend. I thought this one would take us at least to this upper region of the blue downtrend here, but it has failed to do that. So I want to show this next slide. This is a 15-year chart. This is a new slide for anyone who's been watching. And this looks a little bit complicated, but stick with me. With the assumption that there may be a new low in the price of gold. Let's say, so we've broken down. Let's say we break 1075 on the downside. What are some likely levels for the final low of this bear market? That's what this chart is showing. Now, there's a confluence of support levels, and I'm just labeling that right here. That's this green zone, okay? This is, of course, a 15-year chart of gold. So we had a 10-year move up. We've had a 5-year almost move back down. I believe the final low, should it break 1075, will come somewhere in here in this green region. So here's the confluence of support levels. Just look at this and you'll see what all these mean. This black line right here, okay, which extends all the way back here to 2008. This high first hit at 2008 was the 2008-2009 horizontal support level. That comes in right at 1033. This gray line right here, sort of in the lower section of the green level, is the 61.8% entire bull market Fibonacci retracement level. Fibonacci being an Italian mathematician who recognized that a lot of patterns in nature and the markets repeat. And this number, 61.8%, happens to be a level that markets often retrace to when they're still in a primary bull market. So that number coming in right here at 892. The next support level, the 1980 former all-time high, coming in at 850. And finally, extending all the way back from 2001, shown here in magenta, this linear uptrend line that's coming in right here about 880 right now. So what I'm saying is that if gold breaks down, and we don't have that confirmed yet, we don't have a new low confirmed. If this low is taken out at 1075, this confluence of 4 support levels is extremely strong. This is going back multiple decades. This 850 high going back multiple decades. This linear uptrend line going back from 2001. The 61.8% Fibonacci retracement, which would be pretty much the lowest retracement that we would still consider valid for being in a bull market, coming in right here at 890. So yeah, this is a drawn out bear market. Absolutely. It surprised a lot of people. It surprised me several years ago when I saw the severity of these declines that were coming into play right now. But my point is, it looks to me like we are closer to the bottom of this bear market than the beginning of it. It looks to me like most of the damage has been done. So if we experience another $50 to $150 on the downside for gold as a possibility, that is a significantly lower percentage than we have seen thus far for this bear market. So if you've been holding on here since 2010, 2011, I don't believe this is the time to sell. I think the time to sell, if you were really smart, would have been here in 1900, 1800, and maybe try to buy back in here. If you've been holding this whole time, or if you're new to this market, there is some very good value in gold. There may be some very better value here coming in over the next few months, and that is shown here in this green support level. So that's about it for this chart. I know it looks fairly complicated, but I felt like it's really important to explain 1, 2, 3, 4 support levels that all come in here roughly around this $150 range. Roughly 870, 880 to 1030 for a final low of the bear market. I think I've pretty much said it. So we broke the short-term uptrend. The next support is 1075. We're looking for this 850 to 1033 for a final low. Anything holding above 850 is bullish over the long run. Over the long run, that would be a multi-decade consolidation from 1980 to 2009 that has broken out and has now come back down into that region of the breakout. And there are a number of other commodities that I've written about where you can see patterns like this, such as oil, such as copper, where you've had these multi-decade breakouts and then a retest of that breakout zone before the extension of the bull market. So that's what we're looking at here for gold as far as I'm concerned. Coming up next, we're going to have a separate presentation on the silver market. Thank you for joining me for this one, and I will see you in a few days again.